Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. Last day of the month, October 31st, 2014, and this is the daily report for gold and silver. Absolute virtual meltdown in the precious metals markets, everything but palladium coming down in double and triple digits, with gold trading off about almost 2.5%, silver over 2%, first to gold. Currently trading at 1171, that's right, 1171, puts it off for roughly $28 on the day. The low 1160, an important number, we'll talk about that. The high 1200, another interesting number, and as I said, currently trading off roughly $28 on the day. Traders, silver, and you heard it here all week. We've been talking about silver going to $16. Silver currently at $16.09. The low, if you're ready for this, is $15.60 on the day. The high, $16.50. More on silver in a little bit. So traders, start to show off. We're looking at a 720-minute chart, in essence a half-a-day chart. We talked about this the fact on this last rally that we saw, in which the market hit this triple bottom. This was the third time the market had been there, and we had the subsequent rally, which took us from 1180 up to around 1255. Now, as that market began to come down, we had the opportunity, and this is where I felt we could be at a crossroads right here. And the reason that I felt we could be at a crossroads is it was exactly a 38% retracement, and one model would put us in a continuation. However, what we did see as the market really hit that 38% retracement, this level right here, is as we broke rather hard. And we broke hard during the release of the FOMC meeting minutes. And I wish I could have gotten this in a little bit early, but we initiated a short position roughly here at about 1208. The rest is history. This market has been moved down, and we have got this position currently in some nice profits. Now, we have trailed our stop just below 1215. I will probably send out a trade alert, and the trade alert will recommend trailing your stop above 1200 or 1198, and that is because that is the high of the day, roughly 1200 being the high. So we're going to want to move our stops down and trail them roughly, as I said, to 1200. Now, what's really moving this market? Well, a couple of things. First of all, record closes in the Dow, S&P, and the dollar is on fire. Let's take a look at those markets. So what I've done is I've pulled up our daily dollar index, and as you can see on this dollar index, I've actually got a fib retracement starting from the beginning of this rally at around 79, and then it topped out at around just below 87, and you can see the market comes down. In terms of where it comes down to, it's above the 38% retracement level, below the 23% retracement level. So we don't really get a lot of information in that way, but what we do see is as that market comes down, it forms a base in this area, of course, and then it's off to the races again because we have now exceeded this prior top right in here. So we had the Dow closing in record territory. S&P's also in record territory, closing at 2010. This is the E-mini S&P 500. You can see it closes at 2010. Traders, you've noticed I've been using a lot of the mini S&Ps. We are going to be starting a trading service similar to the gold forecast, end of this year, beginning of next year. And for those that are interested next year in trading the S&P 500s through either the mini or the large contract, we are going to have a daily service. I'm really excited about that, and realize, traders, that we'll continue to work hard as we have been in the gold market, but as a trader, I look for defined trends, and I happen to like bullish trends. Now, we're making some real serious money catching the short side of gold, but I like to catch bullish trends. It's kind of in my my makeup, my DNA, that I like to ride these really long bullish trends. And my God, take a look at the S&P. We've had a dynamic move throughout this year. Those of you who are interested in getting some more information on this new service, you can just email me at gary@thegoldforecast.com. But again, this, of course, is our record close in the Standard & Poor's 500. So traders, obviously, the big question is, have we seen the market find any support in gold? Are we looking for lower prices? Can we expect a bounce here? What are we expecting in the markets? And the first thing I draw your attention to is a chart that we've been looking at. This, of course, is a weekly chart, and we've identified a pretty interesting pattern that we tend to find in markets at definitive pivot points before they trend lower. And that, of course, is the Three River Evening Star. Now, this particular pattern, if you look at it, these are, of course, weekly patterns, but you have this red candle, this green candle here. You get a second green candle for the second week. You get your consolidating candle right here. It's almost a shooting star, and this long black week down. That, of course, to me, with confirmation next week, would signal dramatically lower prices, but there's another way we really need to look at it. Let me go ahead and pull that chart up. So traders, this is the chart I'm referring to. It is our 2-day chart, and really on this chart what I have been looking at or attempting to identify are specific pattern groups that I see a similarity in. Now, the one thing we've talked about was this triple bottom here, a failed attempt. In other words, I believe that what we saw was 1, 2, 3, 4, 5 waves up. I think that we saw some sort of an A, B, C. We can also define it as a compression triangle. And I think we went back into an impulse cycle here, or an impulse phase. However, when it hit 1800, this was the ceiling here. And so this is actually what I call, in terms of a wave X, or it's the transitional wave into a bear market. There's a couple of different counts that I have. And here we saw the significant move down. Most importantly, it's when the market broke 1534, I believe, that we saw a dramatic decline happening very, very quick in the market, in which it went from 1500 to 1200 almost overnight. And the reason I bring that up is we have now broken below this long-standing triple bottom. We're definitely below it. Let's go ahead and blow this up a little bit. But we've definitely began to trade below it at this point. And so, yeah, you can really see it if we go ahead and blow this up. You can see that we're down around the 1170. And so my belief is that with the market like this, we could see dramatically lower pricing. Now, where could we see the market go to? And to really take a look at that, this is a weekly chart. Traders, you've seen this 50 or 100 times. I've had this chart for quite some time, but now it's really coming back into limelight in terms of providing us with some really useful information. 61% retracement, 1167 matches up with the low. So that's where we're finding any kind of tentative support right now. Traders, if it breaks through this critical area, my sense, and this is more an interim to a longer term view, is the market has nowhere to go but this 50% retracement level of the large move. And when I say the large move, I'm talking about a move from 300 to 1900 and then retracing 50%, 1102. That would be where I'd look for a particular bottom of this market should we see it continue under pressure. The caveat is we could have seen the bottom today. We don't know that. For that reason, we're going to take our current position and trail our stops a little bit. But my sense is if we have any kind of follow through, and my belief, based upon the fundamentals out there, is we will see follow-through selling in gold unless the stock market turns around, unless the dollar becomes weaker. If those things happen, of course, all bets are off. But assuming that we have some sort of consistency next week and follow through, and when I say follow through, I mean the dollar's stronger and the equities are stronger, we're going to see gold weaker. We're going to see it continue to break below this area, and it could track to as low as 1100 per ounce. So traders, were at $16 on silver. And we called for it this week. I just didn't think it would happen this quickly. And what I was identifying really was this particular support level. And once we breach that, you can see that right in here. We've got lower pricing ahead, no doubt. So I've gone ahead and added some data points because the real key that we need to address is if gold continues to fall, well, where is silver going to fall in suit or along with it? Now, to do that, we really have to add some more data points. We've broken through this area. We talked about that. I said that it was my belief it's going to go to $16. If it does continue to trend lower, what you notice is I've just moved a horizontal line down. The line down matches this particular low here and this high here. Those are two data points where we see it being support and resistance. So that tells me it could be a pretty important level. It comes in at around 1480. Traders, am I saying we're going to see silver go to 14? No, but we have a real chance if gold goes to 1100 that we'll see silver go to $15 an ounce. This has been Gary Wagner wishing you as always good trading. We certainly got that this week. We'll talk to you on Monday for another daily update and review. Bye-bye.